Alright, so welcome everyone to my first ever Forex trading video. So basically I'm just starting a series of videos and hopefully I can go all the way through with this, but it's basically just going to be journaling of me going through some trades and seeing my progress with the particular strategy that I'll be using. In the first video though, I'm going to be backtesting, and I'm going to walk through the process so that anyone who does feel like watching this will have a good idea of what's going on, how I'm taking these trades, and why I'm taking these trades. Alright, so in these backtesting, before I go any further, I hope the audio is doing okay. I've tried to change a few settings because the audio was really quiet, but I also have to talk kind of quietly because it's nighttime and everyone's sleeping. So yeah, I hope everyone can hear me. So I will be going ahead and backtesting this for 1 week. I have everything set up here and ready to go. We're going to start with the 10-minute bearish engulfing bar and bullish engulfing bar strategy rules, or just strategy, and this is the rules. First rule, engulfing, let me fix that, engulfing candle must have a higher high and a lower low than previous candle. Alright, so that just basically defines what a bullish and bearish engulfing candle is. And so I want to go ahead and show this picture real quick. This picture is the example, the textbook example of a bullish engulfing candle. Bullish being the fact that this candle is a bullish candle instead of a bearish. So the first candle is a smaller candle. By definition, it is smaller than the engulfing candle. The engulfing candle, in our rules here, the highest high, which is this one for this candle, must be higher than the highest high of the previous candle, which is down here. So this is obviously higher. So this is an obvious bullish engulfing. And then the lowest low, obviously lower. This candle needs to basically engulf this entire candle. It's like the whale to the minnow fish or something like that, but maybe not so exaggerated. Because sometimes this could actually be up here and the wick is just barely under this, and that would still be a viable bullish engulfing candle or bearish engulfing, whichever way you're looking at it. Okay, those are what we're looking for in these trades. Now the second rule is very important. Engulfing candle must form at one of 3 levels, and I might change some of these rules once I've actually done some back testing if I find that there is a major sort of trend going on that works better than what I have here. But for now, this is what we're doing. Engulfing candle must form at one of these levels. Key structure, which is really important, support and resistance, which is, I'll have to explain that later. We got B is trend lines, which would be this green line I've got going way up here. This is a trend line where price had come up and bounced and came back up and then broke back up again and then retested the same exact trend line 3 more times. This means that this trend line is respected by the market, and that in the future it very well may be as well. So anyways, I placed it there just in case we find the candles that we're looking for at those levels. This is actually the 4-hour that I was looking at. This particular chart is not going to be relevant once I start backtesting. This is just to chart everything so that on the 10-minute I will see the lines and everything to give me an idea of where I'm going. Alright, and then we have the third level is at major psychological levels, which I have at 0, 0, and 50. I believe those are, as I've been informed, the major psychological levels. So 0, 0, and let me give an example. 0, 0 would be, now we're talking these 2 numbers right here, 0 and 0. This last number on this particular pair, the Euro US dollar, this last number is actually just a pipette. Now, not all brokers are going to quote this last number. It's just something that some do and some don't. On this particular one, it does. The first 1, 2, 3, 4 numbers are the most important. You can really just ignore this last one. Semi-ignore it. It's still going to be useful whenever you're finding the exact pip amount. But for now, these 2, see this one right here is a major level, which I have plotted here. And then the 50, 1050, is the other major. I plotted that. I plotted a few of them, at least in the area that I will be backtesting. And I will be backtesting the 10-minute strategy in 1 week, or for 1 week. It's going to be from the 1st to the 7th of February of 2016. And this is where I'll post the results. And so this purple line here is where I have started the test. So that's where the test will be starting. All right, and then the third rule is we're going to be setting the take profit and stop loss at 10 exact pips. And I'm keeping it at that just to see what the results will be if I do it at that. I can also change that based on when I'm actually using the strategy, based on how strong I think the support is or resistance. So if I really think the price is going to go further based on some more information that I have, I might let the price go a little bit further and create more profit. But for now, just for the test, I'm going to stick to exactly 10 pips for both the stop loss and take profit. Rule 4, do not move the stop loss under any circumstances. No matter what, even if I'm sure the price will come back up and almost touch my stop loss or even go a little bit past it and then come back down and hit my take profit, I should never move it, because this test is strictly to find out what the results would be if I were to make this as mechanical as possible and to make it to where exactly 10 pips on both sides and see if I came out in profit. Alright, so let's go ahead and get the test started. I think that we've got all the rules set and everything is ready. Going full screen mode. Alright, so I'm going to go tick by tick. It's going to start right. We're going to start right here, and all we're doing is we're looking for engulfing candles. Now I know that. Let me get back. I know that on the 4-hour we're in an uptrend, but if I do find any, we're basically in an uptrend. But if I do find any bearish or down candle, I should just say bearish. If you don't know what bearish is, go look it up. It's basically these candles, the ones that go down instead of up. It's the down momentum. But basically, if I do find a nice and good, solid, bearish engulfing candle, even in this uptrend, if I find it like on a good support or the trend or at a psychological level like these, I will take it. Alright, so let's go full screen on this one. And let's get started. Alright. Alright, so already it looks like we might have one, but I believe that I have set my rules to where this one actually, this purple is kind of in the way, but I can still see the wick on this one. To make it to where, okay, my rules say that this basically is not a bearish engulfing candle because this is at the exact same level as this candle. Now I'm going to have to consult someone to find out if that's the case, or if it has to be higher than the previous wick or not. But for right now, we're not taking it because it does not fit the rules. It needs to be a psychological level anyway. Now this one does. It's really choppy though, so I wouldn't normally take this, but I think I should. This is actually a bullish engulfing, so that means we're making a buy order. Oh, it looks like you can't use your tools on full screen mode. That's interesting. So I'm going to go ahead and use my tools to make a long position here. And I will be making it exactly 10 pips. Let's see if there's a key. Oop, did I do it right? Okay. Add to favorites. Okay. We have to make this exactly 10 pips. So it starts at 08519. So we want to find 619 as the target. 619. Oh, this is going to be pretty big. Up here. There we go. Ooh, this is a pretty big one, yeah. And then 419. There we go. And let's find out if I win. Oh, it looks like it already tells me that I lost. Yep, it looks like it. Now it's possible if you're up here, you can take, now if you are working this and you see that there's some consolidation and price didn't go exactly straight up, then more than likely my intuition is going to say, I think price is being a little bit consolidated right now. I'm going to go ahead and take my profit up here. So if I see that, I'll probably say I'm going to go ahead and get out. But for this strategy, we're not going to. We're going to let it hit the stop loss right there. It barely breaks my stop loss and then comes back up. So we did lose this trade. So I'm going to go back. My first trade is a loss. 10. I want to make that more apparent here because I put it negatives. Okay, so all right, let's move along. Let's go full screen. So that's not a bearish engulfing. Continuing. This one, I see that the wick does go beyond this one, and it is at a psychological level. So I actually probably will take this one because it does fit the rules. I'm going to take another long position. And again, making it 10 pips. So we got 57. We need 60 and 7. Oh, right here. And then 40 and 7. There we go. Alright, so moving along here. And, oh, comes down. Consolidates, almost touches my take profit. I'm sorry, my stop loss. And I almost lose that trade. But in the end, I win that one. Okay, that's good. We got a 10 pip, our first profit. And I'm going to put pips next to the profits to give it an easier way of keeping track of my wins and losses when I'm counting them. I'm just going to do a few more of these. I'm not going to do the entire week on camera because I've already tried to do this one time and it took so much time. It was pretty ridiculous. Alright, so let's find out. I'm going to stay out of full screen mode for now. Instead, we'll just full screen it like this. It's not really full screen, it's just, there we go. Okay, so this one, technically, I did not mean to go that much further without analyzing this, but I guess this would technically be a bullish engulfing candle. It doesn't seem to be at any sort of it's a little bit into consolidation. This area right here is a bit of indecisiveness. So I think I am going to take this just because it technically fits the rules, but I'm not sure if I would take this in real life. But we are sticking with our rule set, just not to waver from that. 8508546. We need 646. I'm sorry. So this is way up here. 646 right there, and then 446. 446 right there. Okay, and I think this one loses, but let's find out. Yeah, it does. So really good, really strong loss right there. 10 pips. No, we're not putting pips behind that. Okay, so far we're in the hole 10 pips based on the strategy. Okay. So moving along, that doesn't quite make it. Neither does that. Nothing too particularly interesting yet. I'm going to take, I'd say, 2 more trades and then I'm going to do the rest off camera. Because you pretty much get the idea. And actually I can skip along a lot because I'm only looking for trades on these psychological levels or trend lines. So I'm waiting for price to get up here, and it does. See if we got anything. No, not quite. Nope, that was almost one, but not quite. Okay, so we have a bearish engulfing. It doesn't quite make it to this. So even if this were to win, I'm just going to leave it alone because it's under it, and I don't want to be trading towards it. But this could be a winner anyway. Oh, in fact, it wasn't. Or it was. Actually, I would have traded away because this is a bearish engulfing. It's bearish and not bullish. But yeah, that looks like it would have been a winner. Let's find out just for the sake of finding out here. So 875. We're looking for 775. Yeah, that would have been a winner. Nice. But it didn't make our rules because it was below this line. It needs to be on it. Now here's one that's on it. Let's see. Nope, not quite. Didn't quite make a candle like we needed. Not there either. Okay, no, the wick of this one is over that, so that breaks the rules. Alright, so this, right, they're equal, so like I said, we're not taking those. Let me stretch this out because volatility has decreased. Got a rejection candle here. A rejection pin bar, it looks like. So it might go up. Let's see, is that a bearish? No. It's another rejection pin bar. I should say bullish pin bar. That's a bearish pin bar. They form on the 10-minute quite a bit. Okay, we're just going to find one more trade. I'm going to do the rest off camera. Looks like price is touching the 900 area of the 0900 area. If I'm missing any, I'm sorry. I'm trying to make sure I catch all of them. Price goes back up there. Ooh, and then breaks right through it. And then we have a bullish engulfing above. Sort of a bullish engulfing indecision candle, so I probably wouldn't take that. This one doesn't quite cut the rules. Nothing there. Nope. Okay, no, not there either. Okay, here's, oh goodness, this is right above it. Now, because my rules say I have to have this at this line, I guess this would not be one I would take, but I guess aside from my rules, I probably would take this one. I'm thinking I probably would because this one forms just above it, and it's a very strong bullish engulfing. So I do want to technically see if this one would be a winner, because I think it would. No, it's right here. There we go. Okay, 10 pips. So we're at 9099. 909109. No, I think it's yeah, it'd be 19. 19 and 9. There we go. Okay. And then we gotta take this one down to is that right? Oops. Nope. Control Z. Oh, looks like this one loses. That's unfortunate. I don't quite think that is 10 to 10. Is it? I think it is, actually. If my math is correct, I'm not really getting used to this. Okay, so it looks like it goes right up here, and this probably, after seeing this rejection, I probably would have taken my profit right here. Because it came up here, and then strong rejection candle, and then broke and came up here. We probably would have taken profit up here after seeing such consolidation. But price ended up going back down very strongly and breaking profit. But since this wasn't on our strategy, we're not going to go ahead and take this. I'm going to go ahead and take the rest of the trades offline, and I'll be right back. Alright, so I'm back now after finishing the back testing for the first week of the month. And I didn't actually get as many trades as I had expected, but with the restrictions that I put on this, it makes more sense. So I've ended up with 11 trades in 7 days, but this is just on one pair. I'll be trading obviously way more than one pair, more like 20 to 25 pairs, as long as they are good pairs. Alright, so in the end, it looks like after the first 3 trades that I think I took on camera, I had 4 good trades in a row. I kind of thought I was on a roll, didn't know if I was going to get any more losses. I did get 2 more losses. So the total came out with 11 trades. I came out with 7 wins and 4 losses. So in total, the total profit is 30 pips. I guess that's not too bad. It could be better though. I might have to tweak it a little bit to find out what is considered a good trade and what's not. Alright, so let's go to our first example. I didn't notate all the rest of the trades that I took on camera, but I did, after a while I started realizing I probably should. Alright, so this was a good example that I took. I saw it like this, it was up here, it came right up to this, and rejected and made a strong bearish engulfing, and I won that one pretty much right off the bat. And then we came up to another one. I didn't have one for a while until right here. There was this really strong one, and there was just a lot of momentum after this small candle. So I figured there's probably a good chance after this closing that it was going to go down more, and it certainly did. So it's almost an instantaneous win on the first candle. Excuse me. Alright, so and then after that there was a loss here, but it looked like a really good trade. I'm going to sort of focus on this one. I believe it was a good trade. You see this right here is a support that I had set up. It's not a psychological area or anything, but this was a support I think back from last 2015. I think it was a low of 2015, and there was a lot of support and resistance bouncing off of this. So I figured this was a key support or a key level that I could trade off of. But it looks like it didn't work in this situation. This was pretty strong bearish engulfing. So I went short on this, and it just went straight up. I mean, it just went the opposite of what you would think it would go. So that one didn't work out too well. It eventually came back down, but then I came to this long-winded win, which basically means it wouldn't. My take profit was down here because this was a bearish engulfing, so I went short. The take profit was down here, but it came back up and started getting close to my stop loss, but then came back all the way down, and I think it hit right here. So that's where it hit my take profit. It took a long time, a good couple hours, before it actually hit my take profit. All right, so that's it for today. I went ahead and back tested 1 week. I'm going to do a off-camera back test of about the rest of the month. Well, I'm probably going to do a back test of, let's see, January. I'm just going to do all of January. I'm going to do a back test in this whole thing, and I'm going to see if there's some different changes I can make to this strategy while I'm back testing to sort of increase the odds. But once I'm done back testing this entire thing, I'll be back with the results. And thanks for watching.